Let's get started. Good morning, guys.
Good morning.
This morning, we have with us, despite that it says Joanne Koontz, we have with us today lovely Jackie Duran, which is an attorney in our office. She, just like Joanne, is practicing in the area of real estate and business law. She is absolutely amazing. Many of you have dealt with her on a lot of the transactions that we have helped you with, and she has been absolutely instrumental in this whole process in reading a lot of these provisions on the loans and what everything means, and is helping to keep Joanne and I straight in our understanding. So it's absolutely helps to have a very much of a detail-oriented person. So today's topic is certainly something that I wanted to make sure to bring Jackie on. So I guess we are, let me start by saying that it is Thursday, April 30th. And it's important as we keep track of these days. And it's also important that we keep our time because of all the new updates that are consistently coming out from SBA. Today, we bring you yet another guidance that has been issued. This guidance was issued by SBA late last week, basically over the weekend, if you will, and there's been a lot of publicity. So I wanted to talk a little bit about it and the, I guess, the concept behind it before Jackie jumps in and discusses the details with you. So I am sure a lot of you have been reading in papers about all of these big corporations getting these PPP loans. And a lot of these corporations have been in hot water about taking these loans and to say, well, number one, you guys really don't need the loans. And number two, you guys have access to other financing. So why are you even taking the money? Why are you taking more money than you're supposed to get? And are you sure you have under 500 employees? So a lot of publicity has been around criticizing these big companies that are taking the loan, which stemmed, of course, to criticize the banks on putting a lot of these applications forward and giving them preferential treatment, and then again questioning on what is the purpose of this PPP loan. You know, when all of these provisions came about, the whole goal was to help that small business. They lumped all of the small business with companies that are 500 employees and under, but there's a lot of small business, and we discussed this a little bit on our Tuesday's webinar, that are really between 1 and 10, 1 and 25 employees. So there's really has not been much distinction about how much funds need to be allocated. So with all of the public criticism, SBA came out with more guidance to say, well, wait a minute. You guys are getting these loans, you big companies and big organizations, but you told us when you applied that these loans were necessary and that you faced economic uncertainty. So what the guidance that SBA has issued is centered exactly around what did you really mean when you said you have economic uncertainty and the funds that you're applying for are really necessary. So I'm going to turn it over to Jackie, who's going to go over some of that guidance, and I will jump in and I will kind of monitor some questions from you guys. But this is just like every other rule, there's a lot of gray area in here. So I'm going to let Jackie discuss some of the specifics on this guidance. Jackie, go ahead.
Thank you. I'm going to go ahead and open up this PowerPoint. All right. Sorry. Okay, here we go. So I definitely agree with you, Marina. There's a lot of gray area here. And I think it goes beyond just, you know, there's a lot of larger businesses that were getting scrutiny from the public, but small businesses as well are getting scrutiny from legislators. Because there are small businesses who have taken the loan or who have applied for the loan who weren't necessarily intended to receive this loan because they're doing just fine. So this is essentially what we're going to go through. We will, of course, accept you know, questions after the fact as well. So I'm sure this is going to spur some questions, and, I welcome the questions, and so does Marina and Joanne. So we'll just start with the good faith certification and what that is. As Marina said, you basically, if you apply for the PPP loan, have to certify that there's some kind of economic uncertainty. And I'm sure, Marina, you agree with me that as of a month ago, or even, when the application first came out, I think every single business out there had some level of economic uncertainty. So it was natural to think that this net was pretty wide about who was intended to receive this loan. However, since then, the legislature has wanted to tighten this up, which is why this guidance has come out late last week. It came out first in the form of a FAQ answer. And I've highlighted and bolded some language that I think everyone needs to make note of, because I think it's important and it needs to be considered when you're trying to determine if you really do qualify for this loan. They clarify that all borrowers, not just these large companies, need to assess their actual economic need for this loan. You need to consider the current business activity of the business, not necessarily what you think may come or some adverse economic circumstances that you may stumble into. It's the current business activity that you need to be focused on. Now, what I will say is certain businesses might not necessarily immediately notice the economic effects of something. For instance, if you are a realtor and you have contracts pending going into the pandemic, those contracts may be still closing, and you may still have income coming in from those contracts that are closing now. However, you may have nothing on the horizon. So if things look like they're drying up, and you can sort of point to that fact and show that at this time last year or in 2018, you otherwise would have typically had 3 or 4 deals in the hopper, I think that's a fair demonstration that you can make to SBA if it comes into question. Something else that they want you to consider is your other sources of liquidity. That is, I think, the most gray portion of this guidance. So what exactly does that extend to? Does it extend to lines of credit? Does it extend to the liquidity of the owners of the business? We're not entirely certain, and we're hoping that more guidance will come down in that regard. What I will say is, if you are a business and either you or your parent company has a decent amount of cash reserves that could otherwise carry the business and, more importantly, carry the payroll, you probably don't qualify for this loan. And likewise, if you are a FedEx contractor and business is better than ever, and you're operating at holiday levels, you probably also don't qualify for this loan because you really don't have an economic need for the loan. And I want to just reiterate that the main goal behind this PPP program is to keep employees employed and off unemployment benefits.
Let me also add here, what makes this even more gray is the time frame. So when you say, look at your current economic activity and then look at economic uncertainty, there's no guideline here to say, look at what you think is going to happen in 3 months versus 6 months versus a year. A lot of the businesses may, of course, see immediate decline, like your hospitality, your restaurants, your hotels. But what does the uncertainty mean in terms of current economic conditions? Just like you said, does my source of income need to dry up in 3 months or in 6 months or a year from now? That is still very gray. So thank you, Jackie.
Well, what I will say is, and I think this is a point I should have made, you are supposed to utilize sources of liquidity to support your operations to the extent that it's not significantly detrimental to the business. Now, what is significantly detrimental? We could all argue that. But I will say that they don't want you to run your business into the ground just to keep your employees employed for another 2 months or 3 months. That won't leave them a job to come back to after that. So I don't think that's the goal here. It's not to drain everything you have. But if you're a larger company or you have a parent company that has plenty of resources, they just don't want you to take advantage of this unless there's a real true need for it in order to continue your operations and keep your employees employed. So that brings me to the fourth interim final rule. This basically reaffirms what that Q&A answer provided. And it gives a little extra guidance as well They kind of blanketly state the intention behind PPP again, and the fact that it's really supposed to be for small businesses who are adversely impacted by the virus. So again, if your business is operating as usual and you really haven't experienced an adverse effect to the gross receipts or to the activity, and you don't reasonably foresee that in the pipeline in the future, you're probably not who is intended for this loan. And that's also, that brings me to the safe harbor, which I think a lot of people aren't totally understanding and are somewhat overlooking, including my own clients who I've discussed this with. So a lot of people take the position of, oh, okay, great. Well, I already submitted my application, or I already got my PPP proceeds. So thank goodness I dodged that bullet, because at the time I made the certification, I was making it under the broad net that just discussed economic uncertainty. This is operating in a retroactive manner, which means, given this new guidance, if at the time you made that certification, you did not fall under the economic need based on your current business activity or other sources of liquidity, you now have until May 7th to either retract your loan application or repay the loan proceeds. Now, I think that there needs to be very careful consideration of some factors that we're about to share and discuss before you make this decision, because I think every business is unique, and there's really no bright line rules, like Marina said. So I think weighing these factors and outlining how you're coming to this decision about why you qualify under that certification will be really helpful if it ever comes into question.
So I'd like to also say that the reason why they call May 7th date kind of a safe harbor is that if you feel like you were not entirely honest or didn't quite understand what it meant to have economic uncertainty, but now it's clear that you really don't have economic uncertainty and you didn't at the time, the whole concept with safe harbor is that if you do give this money back by May 7th, they're not going to come after you in question and get you in trouble for certifying and signing that SBA loan. So that is the whole idea with that May 7th date. So if you give the money back by then to say, look, I didn't understand what that means, I get it now, I did not have these factors in place, nobody's coming after you to say you falsely signed the application or you did something wrong. So that is the whole concept of safe harbor, is that it's a chance for you. The other thing I want to mention before we get into these other factors is there's really no definition, and we accountants love definitions based on numbers. What does it mean to have adverse consequences? I'll give you an example. When we're talking about some of these other disaster relief provisions like employee retention credit, so this is a good example, because in order, for example, for the business to take the employee retention credit, you need to show that your gross revenues are more than half are less than what they were at the same time last year. This is something I can wrap my head around. I can look at my clients' quarterly revenues in the first quarter of 2019 or second quarter of 2019. I can look at their revenues this year and I can say, you're more than half down. It means you're eligible for this employee retention credit. There's no measurements yet in place, from what I understand, Jackie, if that's correct, about to say, what does it mean that you're having adverse consequences? Is your revenue down 2%, 5%? Is it even based on revenue? So this is where I guess it's also hard for us to advise our clients on specifically how this guidance applies to a particular situation, because that has not yet been defined.
Exactly. Well, it's all clear as mud. So
yeah, exactly.
I'm really hoping for more guidance. I intend to actually submit some of my own questions to SBA in the hopes that they'll respond to those, because I feel like everybody does need this, because right now it's all speculation. I don't think that, like I said, we're going to go through these factors. And I think that if you really truly put some thought into it and you have a good basis and you document that, and they come back and question you, and you can show that you put some true thought into this, and you truly did proceed on a good faith basis making that certification, I don't think you have anything to worry about. So we'll jump into these factors. The first one is, of course, the adverse impact to the business. It's necessary to identify the specific adverse impacts of COVID, or if you have uncertainty, you see business drying up in the future, documenting that and sort of comparing what you would otherwise would have expected your business to be based on prior years of operation had the virus not impacted your business. Cash flow is obviously a given. If you have business as usual, your gross receipts are the same or are increased, you definitely are not going to be someone that I would consider to be a good applicant. Mm-hmm. Your liquidity and access to capital, again, I think this is the most gray portion of the guidance. You know, if you have quick access to cash, and it's enough to not render your business insolvent in a few months, I do feel that you need to consider that and weigh that when you're considering these other factors. Like Marina said, there's no bright line test about how many months of operating capital you need to have. We are nearing sort of the end of this wave. Businesses are starting to reopen on Monday, if you're in retail, restaurants to a certain extent, but then there's others in the hospitality industry who are probably not going to be reopening for some time. So it really is a case-by-case analysis that needs to take place.
This, can we go back to the liquidity issue for a minute? What makes this really gray for me is, what does it really mean? Like you touched on it at the beginning. What does it really mean to have access to other capital? Does that mean you have money in the bank? Or does that mean you have access to lines of credit? So if I have access, if my business has an open line of credit with a bank that I can access, but that line of credit has a rate to it, I don't know, 5%, 8%, depending on what my rate is, then to me, of course, it's better to take this PPP loan, because even if the portion of it does not get forgiven, it's a 1% loan. So it's a no-brainer. So is being able to borrow other money a liquidity issue, or is actually having money in the bank a liquidity concern? The other thing is, just like you said, the owners. You know, typically we talk about the subject a lot where, you know, the owners are protected from the company is protected from the owner, you're an LLC or a corporation, whatever the case may be. And now, does it mean the owners should be able to fund the business, or does it not rely on the owner at all for this particular you know, piece of the guidance? And I guess my other thought is I've had a couple of clients at the very beginning ask me, do we need to take cash out of the bank account to show we have no cash? And that's really hard to say at all either, because, well, who's going to be looking at this stuff, and will they go back and look at to say that there were significant withdrawals from the business at the time you made loan application? So this is extremely gray. Again, there's no definition, there's no, you know, line to say you've got to have X amount of dollars or X amount of credit available, or the owner has to fund it in X amount. So again, just to reiterate how gray all of this is, but this is yet one of the factors that is being considered in your need to apply.
And I would like to comment on the question of withdrawing cash. I would not recommend that. I would sooner apply for the loan and basically say, hey, we kept this cash here because we didn't know how long the effects of this were going to continue, and we wanted to make sure that we kept the doors open for not only our customers but our employees for as long as possible. And we didn't feel that the cash reserves were sufficient to carry the employees for the period of time that we felt the effects were going to be in place. Mm-hmm. I think that would be a much better position to take than to ever withdraw funds in an attempt to make it look like you have less than you really do. The reason for that is these loans are going to be scrutinized after the fact. That is something that a lot of practitioners are speaking about right now. There's a lot of warnings. Even the Treasury Secretary has mentioned this, that because there's not this formal underwriting process right now, they're trying to shove these loans out the doors as quickly as possible. They're going to be reviewing the borrowers after the fact. So that's why it's important to be as open and honest as you can. I think if you truly operate in good faith and you weigh these factors and you make a good faith certification and you're honest, I don't think you have anything to worry about. So the next one is the location and nature of business, like we were talking about before. The longer you're shut down and the longer you're required to be shut down, the more likely it is that you can show that this is really adversely impacting your business. Whereas if you are in retail and your doors are opening on Monday and you haven't made a PPP loan application, you might have a little more difficult of a time showing the need for the loan. So it really varies, again, on a case-by-case basis, depending on the nature of your business and the industry. And this brings me to the next factor, industry. Again, if you are in the grocery industry or the delivery services industry like FedEx, you are doing just fine. You are not a good applicant for this loan. However, if you are in the hospitality industry, you are the perfect applicant for this kind of loan because you literally can't open your doors yet, and you're not able to mitigate some of the losses that some of the other businesses are able to navigate during this time. Marina, I know we were talking about this yesterday.
Yeah,
a lot of people are back their workers. So I'll let you comment because you made some really good points yesterday.
This is quite a point. When I read that, it kind of made me chuckle a little bit. I was talking to a client of mine who's a restaurant, and they've let quite a few people go. They've applied for PPP, and they actually got their funds last week. And when they tried to bring a lot of the people back, some of those people have already applied for unemployment and got it. And then they said, well, we don't want to go back now because now we're getting unemployment. So we're actually making more money now on unemployment with this extra, weekly amount that unemployment is giving you. So we really don't want to go back. So now you're going to have potentially a hard time, getting the workforce back to where you need it to be. And you may have to now dig and find other people that are willing to work and want to work in your particular industry. So I thought that was quite interesting because, this restaurant client was saying, okay, now we're ready. We have the funds. We want to make sure that everybody's taken care of. And, they were a little bit disappointed that some of these folks didn't want to come back to work. So this is, I could see that working in that type of industry. I'm sure there's other industries where this is going to be very similar, probably that low paying labor who may be just better off, collecting unemployment. This is, of course, we have our clients that are, most of our clients are small businesses where they treat their staff like family, and they were concerned when, some of these offices closed and they had to furlough their people, and they, they're can't wait to get the funds so that they can bring all these people back. And like I said, they're just like family. I don't think they're going to have any of the issues, but I think some of those bigger companies that are employing these, maybe seasonal or part-time workers or low-paying labor, they're going to probably be facing some of this issue here.
Yeah, exactly. All right, so the last factor when weighing this is, again, your risk tolerance. Basically, because of the pushback that's being made by the legislatures and the Treasury Secretary, they are going to be looking into the borrowers and the loans that are being issued, and there are consequences if somebody does make a false claim. And again, I think if you weigh these factors, if you truly make a certification in good faith, they're not going to throw the hammer down on you. But you need to take the time to really consider these and weigh these and speak with your advisors about, how you think you should proceed. And of course, we welcome your questions. Now, something else I want to note on that I think also is kind of in the same vein of speaking to who the legislature truly intended these loans for, is the loan forgiveness aspect. So We know that there's going to be further guidance coming in the next couple of weeks, supposedly. So a lot more reading, which will be fun. But what we are seeing so far is that legislators are pushing for additional legislation to even further limit the loan forgiveness under PPP. What is currently being proposed is that no portion of the loan would be forgiven if your 2020 taxable income exceeds that of 2019. What they're also pushing for is that a borrower will only qualify for forgiveness if the gross receipts in 2020 are less than 60% of the 2019 gross receipts. And then they'll put in place some kind of sliding scale for companies whose gross receipts fall between 60 and 90% of what they were in 2019. So this is definitely showing us that the businesses that are not suffering right now from a financial standpoint, who have not slowed down, they're not going to necessarily, if this legislation is passed, which I suspect it will, they will not enjoy the loan forgiveness as they once thought they might. And it's also getting towards, you know, again, the intent behind this legislation and who it is truly supposed to benefit. So I think the takeaway, Marina, is that if you really don't need this loan, I wouldn't take it.
That's absolutely the key. If you don't need this loan, don't take it. And take advantage of the safe harbor date of May 7th to say, you know, I really should not have applied. I don't want anybody looking into me. I'm going to give the money back by May 7th without any further questions. There's a couple of points that I wanted to mention, you know, back to, I guess, all of the certification and the necessity and everything. Point number one. So there has not been currently a rule to say who is going to get audited for these factors. So what size of the company is going to get looked at? I was reading, I think it was one of the articles, Jackie, that you sent to me over the weekend that was mentioning this $2 million threshold. So where I feel like I stumbled upon something that says anybody with a loan of $2 million is going to get audited, or, you know, and again, audit, this is not financial statement audit or IRS audit. This is the audit of your certification of why you got the loan. So, you know, with the gray, how are you going to audit the gray area? That's a question. But I think what they're saying is that we're going to closely look at the reasons why you needed the loan and why you applied. So I think the bigger the loan is, the more likely it's going to get a lot more scrutiny as to why you needed the loan. So again, there's no set size. I think if you're getting, you probably, if you are, you know, a realtor and you were maxed at 100,000 and you got your loan max of 20 grand, you're probably not going to be the one that they're going to be looking at, because, you know, they're going to try to utilize their, you know, their resources wisely. But I'd say the bigger the loan that you're getting, especially if your factors, you feel like a little bit in the gray area, that it's, you know, likely it's going to get looked at. And so in an additional thing that I wanted to mention, and I always say that to all my clients in all circumstances, documentation is the key. Just because you felt at the time that you had economic uncertainty, please write down whether it's note to file or a meeting with the other owners of the business, or just you sitting down and saying, let me look at my list of contracts. I may be, let's say I'm a builder and I am working on 5 contracts now that are from last year. So I am busy, I'm working, but I had these 6 contracts in the hopper and 4 of them canceled. I would document exactly that sort of thing. So really your loss of employees, I would document that. If you have employees that are sick or working at home and now you really have trouble with the actual workforce, if you've got issues with revenue, if whatever the factors are that made you apply for the loan that indicate that you may be facing economic uncertainty, like canceled contracts, like not having enough in the hopper, even to document things like, you know, at the same time last year we had 6 contracts in the hopper and now we only have 2. So that makes me feel like even if you end up later with more work, at this time when you got the loan, you only had 2 contracts versus your normal 6. Things like this, I would get down to the detail that is relevant to your business and document. Because if they're going to be looking at the stuff, let's say 6 months from now, a year from now, 2 years from now, you're not going to go back and say, oh, I remember it was really bad. I mean, everything was crazy. We didn't know what was happening. That's not good enough. You got to have some sort of documented reason so that you don't have to recreate it by memory as to what exactly happened. The other thing that I wanted to mention was, you know, in the certification, when you signed it in the application, it said that I face economic uncertainty and this is why this loan is necessary. So I wanted to talk a little bit about the word necessary because I listened to one webinar yesterday, and it was a practitioner. He was an attorney and a CPA, and he made a really good point that when we as CPAs tell our clients this is a necessary business expense and therefore it's deductible, the same I guess consideration we give to a necessary business expense for deductibility purposes is not the same thing that we're going to apply to determine whether this loan was necessary. So for example, if he made a really, really good example, like you've got business travel and it was necessary for your spouse to come with you and your kids. And so, you know, the hotel room, you had to stay at the Ritz. And so the business expense was necessary. And so you deduct it for tax and we could justify the deduction. That is all great and wonderful in the world of deductibility of expenses. This was a necessary and regular operating business expense. In this particular case, we're looking at, was this really necessary for me to essentially stay afloat and keep my people employed? So you're going to apply a little bit of a different standard to say what's deductible versus was this really necessary for me to survive, essentially. Does that make sense to you, Jackie?
Yes, absolutely. Absolutely.
Yeah. And then to, you know, go a little bit further, we're getting a lot of questions now from our clients about the deductibility or the forgiveness part of it. So the forgiveness piece, of course, we're going to get more guidance. Right now, we have been just focused on trying to understand the allowed use of funds. And so essentially, what is the basis for your loan? How to calculate that? You know, what's my payroll? What are the benefits? How am I actually going to calculate it? Then we get into what am I using the funds for? And then the third thing is, how can I get this forgiven? Am I using them correctly in my ability to get this forgiven? This new guidance that's coming, I think, is going to extend further the ability of the business to show that the forgiveness was not just based on the use of funds, but now it was really based on you actually experiencing these adverse economic conditions, that you needed the loan, you got the loan, you used the loan properly, and now you can get it forgiven. So this was a good, I guess, you know, precursor, Jackie, that you mentioned, you know, decrease in revenue and all that stuff. As of right now, we don't know exactly what that's going to look like. So as soon as that's available, we'll bring it to you. But right now, I would still at least focus on you guys understanding what are the allowed uses of funds. And I wanted to touch and have Jackie touch on that really briefly, because again, there's a little bit of a difference between you as the business owner that has employees versus you as the self-employed individual who has been showing their income and expenses on Schedule C. So, you know, the general, you know, to reiterate, allowed use of funds has been paying your people. So the payroll, any of the benefits, health insurance, and so on, maybe pension plan contributions are allowed, as well as the business rent or mortgage interest on business property and utilities. When it comes to the self-employed individual who's on Schedule C, it feels like they're getting gypped a bit because their, you know, allowed uses of funds, they may be working from home and they may have a shed that they're working in. So even though, again, they're allowed to deduct the use of the shed, or let's say they pay rent, so part of the rent is allocated to the shed. Although, again, it's deductible for tax purposes, it's not really necessarily considered proper use of funds for that. So Jackie, if you want to touch a little bit on that self-employed Schedule C guy and how it's a bit of an unfair in terms of our understanding of how the funds are used.
Yes, so they do seem to be getting the short end of the stick. And who knows, maybe the legislature will rectify that and bring down further guidance to, you know, give them some more relief. But yeah, like you said, the some normal business expenses for a sole proprietor or an independent contractor, even if they're deductible on their Schedule C, are not forgivable expenses, so they can expend the PPP proceeds on. And another distinction I want to make between, say, an S Corp or partnership versus a sole proprietor or independent contractor is they put in place, I think it was the third interim rule, they put in place a limitation to the business expenses that are actually forgivable. So let's say that you're an independent contractor, you typically have been working from home, but January 1st, 2020, you decided to get some office space. You are not permitted to include that as a forgivable business expense because it wasn't a business expense in 2019. So you're only permitted to use business mortgage, business rent, and even utilities to the extent that they were claimed on your Schedule C for 2019. And another limitation that they've imposed against the independent contractors and sole proprietors is the owner compensation that is forgivable is not only calculated, I guess the loan is not only calculated based upon your 2019 Schedule C net income, but the forgivable portion of the loan proceeds that you pay to yourself as owner compensation are capped at the 2019 net income. So that's, again, some, you know, distinctions between how sole proprietors and independent contractors are being treated versus companies that are taxed as S corporations and partnerships.
Absolutely. This is, again, we go back to this every single time we speak about it and say, you know, I know this was a big test, but really for a lot of those small businesses, this is a good time to look at your structure. And when all of this is over and everybody's safe and, you know, back to working and making money, please let's chat about how you're organized. Are you organized, you know, in the appropriate way? Are you, you know, where you should be? Do you need to continue to be on Schedule C? And it's going to be case by case basis. We have not taken every single client and converted them from Schedule C to an S Corp because in their particular case, staying on Schedule C is the right thing for them. But it's certainly going to be quite interesting in this process. I wanted to, there was a question, which is a pretty good question, so I wanted to highlight that out loud. Can an independent contractor who applied for PPP also be a part-time employee of an organization that received PPP for, you know, for them to continue to be an employee? I am not sure. I would venture to say yes, because if you continue to work for that company, the PPP loan that the company got to cover your salary, as long as you continue to work for them, then that company shouldn't have an issue to get that loan forgiven, because the amount of the loan that they applied that's related to you is really just based on your salary there. It's not based on your other income. Now, on the side, as an independent contractor, let's say you've got a Schedule C, you can certainly apply for a PPP loan to take care of your owner compensation equivalent that shows up on your Schedule C. So I don't see that you would have an issue. Again, you are not applying for two things. Your employer is applying for the salary, and then you are applying as an independent contractor. You're not applying for the same use of funds, if you will. Does that make sense to you, Jackie?
Well, I just want to clarify something. The independent contractor who posed this question, they have independent contractor work, and then they also act as an employee for that company.
And not just an unrelated entity.
Right, they're a W-2 employee though, right?
Correct.
Okay.
Yeah, exactly. They're a W-2 employee. Yeah. So I think that would certainly work. The other comment, thank you so much, Phyllis, for posting this. I'm going to read this out loud. This is a little bit of an update on unemployment for self-employed individuals. This has been a hot issue because that system was supposed to work, and when people went to apply, it didn't work, and then I guess the new system was going to be put in place to make it available for self-employed individuals. So Phyllis, thank you so much for posting this. I'm going to read this out loud. Hopefully this helps quite a few people. What Phyllis said is, if you submitted an unemployment application on or before April 4th, you need to apply again. If you submitted an application on or after April 5th, you do not need to reapply. In both cases, independent contractors will get an indication that their application is denied state benefits. But once denied, the Florida Department of Economic Opportunity will contact you with the instructions on how to apply for federal benefits. Okay, so I guess that is a really, really good point. And there's been some articles about this as well that I saw come through in the paper. So it's still very much you know, quite a funky process with the unemployment. Couple of other things that I wanted to mention to you guys. EIDL loans, I think they're out of money again.
They are.
We just looked on that website yesterday and it said they're not accepting any more applications. But I think it mentioned that if your application was in the hopper, that they will still continue to review it. One thing I wanted to mention on the EIDL, and again, the guidance comes after the applications are already submitted, and who knows, you know, how that review is going to go. But you know, as we mentioned before, the EIDL loans were great loans for the non-employee type of business. So where PPP was based on the salary, EIDL was great for other operating expenses. So a lot of entities that had rental properties. So let's say you're a landlord, you've got a portfolio of rentals. EIDL was great for you because it was going to help you deal with the expenses on the properties. Well, some of the guidance came out and said that in order for you to get the EIDL loan for the rental businesses, the rental has to be considered a trade or business. It cannot just be a passive activity to you. So if, let's say I am a CPA and I run a CPA firm and I just happen to have several, you know, residential rentals, it is not considered trade or business to me because I don't manage them, I don't get involved, I passively own them and collect my rent and incur my expenses passively. I would not be a good candidate for EIDL loan for my rental properties in this scenario. So it's got to be either trade or business in that you're actively involved in these properties, or even if you hold them passively, let's say it's a commercial property, that the commercial property is being rented to the business that's occupying your commercial property is an active business. So either the activity of the rental is it's a trade or business to you, or you are renting it to an active business that's occupying the property. Am I understanding that correct, Jackie?
Yes.
Yes, okay. That's also been a big distinction because I think a lot of people with rentals applied for EIDL loans. So I wanted to throw that wrench into the equation a little bit. I personally don't know any clients who have gotten any EIDL loans other than those advances. Some of my clients got the $10,000 advance. Some of my clients got the $1,000 advance, you know, based on one employee rule, but nobody's really gotten the real loan that's expense based. So I don't know if they're behind or if that's really not a priority right now, but we'll keep watching that. And you guys, please, if you got any of the loans approved and have money in the bank, and please keep us posted, because the more we know and the more we understand, the more we can advise other people.
I would like to add something with respect to the EIDL loans. I've heard this from other practitioners. I have not heard this directly from any EIDL borrowers because, to be honest with you, most feel like they're in no man's land. They're not getting updates. They basically just were continuing to reapply because they would get a response upon application saying, thanks, we'll get back to you, but no one would ever hear anything. However, what I am hearing is that there is going to be a little bit of a limitation on the initial disbursement of the EIDL loan proceeds. So I think from what I'm hearing, the initial disbursement is going to be limited to about 2 months worth of your operating expenses. I haven't had an actual client tell me that or receive a disbursement. So if anybody does receive any disbursements or gain any further knowledge on that end, I think that would be helpful to share as well.
Absolutely, absolutely. And at the end of the day, a lot of clients still reach out and say, "Oh, should I apply for PPP loan?" And I tell you guys, even though the funds are running out and people are, the first round of funds ran out real quick, and now there's more funds and the banks are taking application. We haven't heard that the funds on the second round are gone. I gotta tell you guys that with a lot of companies giving money back, there may be more money in this program than we initially think, and there may be more money available for the small guys, at the end of the day. So, if you don't apply, you will never know. But if you feel like you are suffering, you've got truly economic uncertainty, all those factors work, and you really feel like you need the money, you don't have access to any other capital, please do apply. I think this May 7th date will also be crucial, because if these companies have that safe harbor May 7th date to give the money back, there may be a little bit more money in flux in the program at that time. There's probably going to be money between now and then, as some of these big corporations continue to give money back that they got in loans or partially. But I think there's still some money in there. So until we know for sure that there's no more money left, we definitely encourage you guys to apply. Absolutely. I think that was it on my list. We will, see next week if there's any more guidance on loan forgiveness. We will bring that up. If not, we'll, touch base with you next Tuesday at 10 a.m. about any other updates or any other questions. If you guys have any questions or comments or anything you feel like we should know and let our other clients know, please send us an email. We incorporate all of those things into next time we chat, we just try to be helpful and address as much as possible and help you guys out as much as possible. Jackie, anything else, final words on your end?
No, I think you covered everything. I really appreciate the opportunity to share this information, and hopefully, like I said, we'll continue to get some more guidance on the PPP loans with respect to the eligibility and the loan forgiveness, and hopefully it will be some good news.
Absolutely. Thank you, guys. Have a good day, everybody.